The hardest part of leaving the United States isn't picking where you go. It's the stuff nobody posts about. The bank you can't tell you've moved. The taxes you can legally cut, but only if you know how to do it. And the mail with nowhere to go. I left the US 12 years ago and did almost none of it in the right order. I figured it out on the fly. So this is the version I wish someone had handed me. The actual sequence for leaving America. Not which country, but the paperwork underneath it that decides whether this works. Almost every video about leaving the US is about the destination. Which country's cheapest? Which one gives you a visa? Which one feels like Europe for $800 a month? That's the fun part, and it gets figured out no matter what. The destination is rarely what actually stops people. What stops people is that your whole adult life is wired to a US address. Your bank, your insurance, your taxes, your license. Pull the address out and things start breaking. So before the country, I'd get these 5 things sorted in this order. Banking, mail, taxes, insurance, and where you're actually allowed to stay. Get them right and choosing where to go becomes the easy part. Get them wrong and you're untangling it from abroad where all of it is harder. I'll go through each one, what I do, and where my situation might be different from yours. Banking is first because it's arguably one of the bigger deals if you don't get it right. Getting locked out of your accounts while you're abroad is a real problem, not a minor inconvenience. US banks and brokerages are set up for US residents, and a foreign address is one thing they might react to. If the address on your account is in another country, some of them, especially brokerages, will restrict or even close your account because of compliance and securities rules that get complicated across borders. It's not a law, it's each institution's own policy, and they vary a lot. Here's my situation. My domicile is in the US, legitimately. I'll explain how that works in the next section. So I use a US address and my accounts are normal US accounts. That's not a workaround or a way to trick anyone. My legal home is actually a US state. I log in from foreign IP addresses constantly, all over the world, and it's mostly a non-issue. A handful of times over 12 years, an account flagged a login and temporarily restricted it. I called in, verified my identity, and it was sorted in a few minutes. I've never had an account frozen or closed. So in my experience, the foreign IP thing is an occasional annoyance, not the real risk. The real risk is the address. Some people don't keep a US address because their goals are different from mine. My goal is to travel full-time. I'm not trying to become a resident of another country. If you're actually moving somewhere to live or becoming a tax resident abroad, you may not want to or be able to keep a US base, and then you need a brokerage that's comfortable with foreign address clients. This is the part where I'm passing along research rather than personal experience, because I don't do it this way. 2 names that come up for Americans in this situation are Charles Schwab's international arm, built for US citizens abroad, and Interactive Brokers, which also takes US clients living overseas. I'd treat both as starting points to look into, not personal recommendations. I don't use either. And check the rules for wherever you actually live before moving any money. Whichever path you're on, set it up before you go. Opening or changing accounts is far easier with a US address you still control and a US phone number that still works. Sorting it out from a cafe in Bangkok after something's already been flagged is a worse time. Which brings us to mail, the piece a lot of the rest hangs on. When you don't have a home, you still need an address that can receive physical mail and go on your bank, your license, and your taxes. For me, that's a domicile state plus a mail service there. And I also use my parents' address for some mail. The domicile piece is the one worth understanding first because it's where the money is. Your domicile is your legal home base and the place you're officially from, even when you're never there. As a full-time traveler, you generally still have one, and you get some say about where. That choice matters because a handful of states have no state income tax at all. Texas, Florida, and South Dakota are the 3 full-time travelers use most. Mine is Texas, so I pay no state income tax legally because my legal home is in a state that doesn't charge it. Here's the concrete version. Say you earn $120,000. In a state like California, state income tax alone would run you around $7,000 a year. In Texas, it would be zero. And $7,000 could cover a full year of rent in some of the places I actually stay. Two caveats to that. First, this is specifically a nomad situation, someone who keeps a US base while traveling. If you actually move to another country and settle there, your domicile can become that country, and US state income tax mostly stops being your concern anyway. Second, if you do keep a domicile in a state that has income tax, the details matter. Most states start from your federal return, so the Foreign Earned Income Exclusion I'll get to carries over and comes off your state taxes too. But a few, California among them, don't honor it, and you can end up owing state tax on income the federal government already excluded. So when you pick a state, the headline tax rate isn't the whole story. This part gets stated wrong a lot. A mail service does not establish your domicile. You establish domicile by actually being in the state with the intent to make it your home base. Mine is Texas because a friend had an apartment there and I moved there during COVID. That's what made it my domicile, and then I set up my mailbox service in the same state. South Dakota is the one people use when they don't have a tie like that because it's famously easy. One overnight stay, a mail forwarding address, a same-day trip to the DMV, and you're a resident. Once the domicile is real, the mail service is what maintains the address. Mine scans everything to an app. I read it from wherever I am, and I forward the rare thing I need to have on paper. Beyond that, keep your domicile consistent. Where you're registered to vote, where your license is issued, where your vehicle is if you have one, all pointing at the same state. And this is a legal home question, not a way to hide from taxes. You still have to file your taxes, which is the next thing. Now, taxes, everyone's favorite topic. Let me kill the biggest myth first. Leaving the United States does not end your US taxes. The US taxes its citizens on worldwide income no matter where they live. One of only a couple of countries on Earth that does this. Wherever you go, you keep filing a US return every year. The good news is that living abroad might mean you owe far less, sometimes nothing, and it's legal. The main way I do that is the Foreign Earned Income Exclusion. If you qualify, which mostly comes down to actually living abroad, either by spending enough time outside of the US or by being a genuine resident of another country, you can exclude a large chunk of your earned income from US tax. For 2026, that number is $132,900. Earned income, meaning what you work for, including salary and self-employment. It does not cover investment income, rental income, or Social Security. There's also a second path I don't personally use called the foreign tax credit, where the taxes you pay to another country can offset what you owe to the US. It tends to make more sense if you're living somewhere with high income taxes and actually paying them to that country. I'm not in that situation, so I use the exclusion. But you should know both exist because which one is right depends entirely on your situation. I'm keeping this deliberately short because I have a whole separate video on how I reduce my US taxes legally from abroad, including exactly how you qualify and how the W-2 versus freelance sides work. And I linked it below. Taxes are also the one area where I'd point you to a professional. An expat tax expert can easily be worth what they cost. Get this one thing wrong and it compounds for years before you notice. The point for this video is just the sequence. You're still in the system and you plan for it before you go, not in April from abroad in a panic. Insurance is the one people sometimes skip until they need it, which is the worst possible time to learn how it works. US health insurance mostly stops being useful the moment you leave the country. Your domestic plan probably won't cover routine care abroad. Some plans will cover an emergency out of network, but you're usually paying up front and chasing reimbursement, and none of it is built for actually living somewhere else. And Medicare basically doesn't cover you outside the US at all. other than a couple of border and cruise ship exceptions that might not apply to you. So if you leave and do nothing, you're effectively uninsured the second you land. A gamble that stays cheap right up until it's catastrophically expensive. Broadly, there are two types of coverage. Travel medical insurance is built for trips and emergencies. Comprehensive international health insurance is built for people who live outside of their home country and want real ongoing coverage, and it works whether you're moving around like I am or settled abroad with a fixed home base. I use Genki, specifically their comprehensive plan, Genki Native. I pay €273 a month with no deductible and no dollar cap on my coverage. There are still restrictions on what's covered, like any policy, but no ceiling on the amount. It covers me almost everywhere I go without me rebuying a policy every time I cross a border. That price is age bracketed. I'm 34, so that's the rate for my bracket. Genki also has a second product, Genki Traveler, which is closer to standard travel insurance. I've been happy with Genki, which isn't something I hear people saying often about their insurance. It's linked below. Two things to check for whatever you pick. Whether it covers the US. A lot of international plans exclude US treatment or charge far more for it because US healthcare is expensive compared to most of the rest of the world. And whether it covers you continuously or trip by trip. If you're going to be gone indefinitely, you want continuous coverage. Last piece, where you're actually allowed to stay. My situation here is pretty different from most people's, so I'll point out where mine might not transfer to you. Most countries let you show up as a tourist for somewhere between 30 and 90 days. And for a lot of my travel, that's all I use. I move often enough that I rarely bump up against a tourist entry. If you want to stay longer in one place, that's where you look at longer stay options. The digital nomad visas that dozens of countries have rolled out in the last few years, or residency programs if you actually want to settle somewhere. Here's where I'm a little different. I'm a dual US-Italian citizen. I hold an EU passport, which means I can live and work anywhere in the European Union without asking permission. I qualified for it through descent. The ease I have moving around Europe comes specifically from that passport, something someone traveling on a US passport alone wouldn't have. The reason I bring it up instead of skipping past it is a second citizenship might be more accessible than you'd think. It depends a lot on your family, but a huge number of Americans have ancestors who came from somewhere else, and a lot of countries let you claim citizenship through them. I'm actually working on a third citizenship right now, Canadian, which only became possible because of a law that changed at the end of 2025. It removed an old limit that used to cut people off if their Canadian ancestor was too far back. And Canada isn't the only country moving in that direction. Germany opened up descent and restored citizenship claims in 2024, and Slovakia did something similar in 2022, explicitly extending it to great-grandchildren. Ireland and Poland have had descent paths for a long time. An Irish grandparent or a Polish ancestor as far back as a great-grandparent can be enough. It also can go the other way, which is worth knowing. Italy actually tightened its rules in 2025. I was eligible and I did it while I still could, but under the current rules, I wouldn't qualify. So if you think you might have a claim somewhere, it's worth looking into sooner rather than later because the rules can change at any time. For everyone else, the sequence is use tourist entries while you're moving, use nomad visas, or get residency if you want to stay somewhere longer. And separately, in the background, look into whether you have a claim to a second passport. That last one is slow, but it's the thing that turns I'm allowed to visit into I'm allowed to stay. Leaving isn't free, and I don't just mean the flights. Setting up the infrastructure has real costs. A mail service runs somewhere around $15 to $30 a month. International health insurance is a monthly premium you might not have paid when your employer covered you. And if you hire an expat tax accountant, that's several $100s. None of it is huge, but it's real and it's ongoing. The bigger costs are the ones without a price tag. Your US credit cards still work, but building new US credit can be harder when you don't have a domestic footprint. Some services will geo-block you with no warning. Streaming, certain banking features, occasionally a government website that doesn't like a foreign IP. You'll spend a real amount of time being the person explaining to a customer service rep why your address and your location don't match. And the part that's hardest to quantify. You're far from the people and places you know, and you miss the things back home. That's true whether you keep moving like I do, or you settle into one new country. Either way, you're rebuilding a life at a distance from the one you left, and that takes work. I'm not saying any of this to talk you out of it. I've built my life around leaving on purpose. But the people who struggle aren't the ones who picked the wrong country. They're the ones who thought the hard part was the plane ticket, and then they hit the paperwork and the distance and weren't ready for either. None of this is about becoming rootless. It's about having more choice over where and how you live. And if you go in knowing the trade-offs, the choice is very much worth it. So that's the sequence I'd follow. Banking, mail and a domicile state, taxes, insurance, and residency before you move abroad, not after. The destination is the easy part. The paperwork underneath it is what decides whether you actually go or whether it stays the thing you keep meaning to do, the someday dream you talk about but never start. I put all of this into a checklist, the exact order, what to set up at each step, and what I'd do before you leave versus once you're already gone. It's called the Exit America Checklist. It's free, and the link is below. If you want the deeper version of the pieces I skimmed, the tax side especially, I linked my video on legally reducing your US taxes from abroad too. And if this is the kind of thing you think about, designing a life that isn't the default one, that's most of what I write about in my newsletter, Life Undefaulted. It's linked below as well. I left without a plan, and I figured it out as I went. You don't have to. Start with the boring stuff, in order, and the rest gets a lot easier.